Good morning. Thanks so much for tuning in. This is Buy Now, Sell Now on ET Now. My name is Alex Matthew. With me is Cheryl D'Souza. The two of us will take you through the next 1 hour of trade. Let's start that 1 hour by taking you through what we're seeing in the markets as of now. And it's about 0.7% of a cut for the benchmark indices. It's a couple of days now that we've been just a tad bit wobbly, but overall, we've been trading within that range of 15,000 on the upside. We came within sniffing distance of that mark on Monday. And on the downside, you've seen levels of 14,250. And a lot of people have already said that that's more or less the range that you're going to see in the near term, unless you see any major moves or any major news points that would really take us beyond that. Of course, point of optimism here, you've had a couple of days where the total addition in COVID-19 cases has come in a little lower. It's now coming at 3.4 lakh or thereabouts today, and that's more or less close to what it was yesterday. Of course, that's far away from the peak of about 4 lakh that we saw in the recent past. So there's cause for cautious optimism at this stage. Of course, you need to keep precautions and accelerate the vaccination drive. So let's very quickly take you through what the sectoral picture is looking like. Banks are looking a tad bit weak. FMCG more or less flat. Metals are looking weak for a second day in a row, but that's understandable because they've outperformed a very large basis the rest of the market over the last couple of weeks, more than a couple of weeks in fact. PSU banks are also looking reasonably strong, but I think a particular FMCG name is where all the action is, and I'm going to hand it over to Cheryl to tell you all about that. Cheryl, good morning. What do you have for us?
Good morning, Alex. And like you mentioned, that particular FMCG name there where we can see all the action, and that's none other than Godrej Consumer Products. Look at the surge coming in on that particular counter, 25%. That's the record intraday gain that Godrej Consumer Products has seen since its listing in 2001. So a massive surge coming in on Godrej Consumer Products. This is on back of their earnings, as also particularly on the big management change that has been taking place. And later in the show, we'll also speak to the management of Godrej Consumer Products as well. So that one stock is the top stock of the day today, and as well as on the BNSN stock cloud of the day. Apart from that, you have Asian Paints, UPL, as well as Lupin. All three of them will be reporting their earnings today, so watch on them as well. Mahindra EPC, Linde India, as well as Siemens, all of them reacting to their earnings, as well as you have BEL, that's Bharat Electronics, as well as Z, that are in focus on back of that MSCI rejig. But the highlight of the day definitely is Godrej Consumer Products. But apart from that, today on BNSN Spotlight, we will be talking about life insurers. So before we kickstart the discussion with our experts, here is Poonam to tell us how they've actually fared in the Q4, that is the life insurers. So Poonam, good morning, and take it away.
India life insurance industry, the momentum has certainly been sustained. At least that is what we understand from the Q4 results. The premium growth has been fairly good so far, and although we understand a lot of the top life insurance players have stated that yes, the claims are rising, as well as they are expecting rise in the reinsurance rates along with rise in premium rates. And yes, most of the life insurers of course have gone ahead and set aside more reserves towards claims. In a recent note by Nomura, they state that the life insurance industry registered steady volumes in April, continuing the strong momentum from the month of March, largely aided by a favorable base. And also they do believe that the private insurers have sustained good amount of momentum there, with the strong momentum continuing for SBI Life. HDFC's life performance was strong as always, while Max Life recovered to strong growth after a somewhat soft March. These are the kind of trends that Nomura suggests for the month of April. They do state that Pru witnessed some weakness again in volumes in the month of April, but the overall impact of localized lockdowns seems to be fairly limited, at least in terms of the insurance volumes so far. So yes, this is one sector to be watched out for, but of course we are seeing that most of the players would have to keep aside more reserves for claims.
All right, thanks so much for that update, Poonam. It puts things in context for the conversation we're going to have. And let me introduce our guests for today on that note. We've got Kunal Bothra as well as Gaurang Shah, and I'm sure that this is going to be a very fascinating conversation. I want to start, though, on the charts. If I look at three major private life insurance companies, Kunal, if I look at SBI Life, HDFC Life and ICICI Pru Life, I see that at least a couple of them have had a reasonably good run in the recent past, and I'm talking about the last month or so. SBI Life has looked good on the charts, I think, and so has ICICI Pru Life. But of course, and I'm sure that Gaurang is going to stress this point very strongly, you get into these businesses for the long term because of the penetration and various other aspects in India's population and all of that. How are they looking on the charts from the perspective of getting in for the long term?
So good morning, Alex. First of all, good morning, everyone. Well, I think it's a very interesting discussion because I think this is one space which I believe holds a lot of prospect from a longer term perspective. Now, what I've done is I've mapped up the charts for the insurance stocks in the three key stocks over the last 12-13 months from the March 2020 lows, and there are some very typical characteristics which come by for the stock price, so or for the set of the stocks. Now the three stocks which I have marked up are the HDFC Life, ICICI Pru as well as SBI Life. If you see, for major part of the rally which started off in the March lows for these stocks, at least the first part of the rally was more of a very typical kind of a unison kind of a stocks rally where you saw all these three stocks moving together almost neck to neck. So there was hardly any bit of outperformance. You see the green line, which is HDFC Life, that has, I think, from the mid of 2020, from August somewhere, I think that stock started to outperform quite clearly. It became one of the leaders in terms of breakout or potential breakouts, where it tried to channel up the entire sector moving up higher. But then what you're seeing in the last 3 months is very, very interesting, because in the last 3 months from March somewhere, HDFC Life has gone into an underperforming mode, and ICICI Pru as well as SBI Life, both these stocks have managed to show that very sharp uptick in themselves, trying to cover up the big underperformance. So which means that this is a very strong sectoral play in the making. There have been bouts of underperformances and outperformances into these stocks on an individual basis. But then when you look at it in the entirety in the last 12-13 months, it tells you that the entire sector is looking quite strong. And that generally happens when there is a strong multi-month, multi-year up move, which is possible into these names. So which is why I stressed upon the point that from a long-term basis, I think insurance stocks, they look very attractive to me.
Absolutely. In fact, let me go across now to Gaurang. Gaurang, we've spoken about these counters since the time when they've listed, right? In the case of HDFC Life, and you've always been positive on them from the long-term perspective because of the promise that life insurance has as a business. But I'm only wondering whether there are any issues that an investor needs to bear in mind, considering maybe the imminent listing of Life Insurance Corporation. Could you see a move from institution or maybe investors from these insurance companies to the big boy, Life Insurance Corporation, when that listing happens?
Well, I'm glad, Alex, that you brought the LIC IPO in the topic, in the conversation. And first of all, good morning to all of you all and wishing good health to all of you all. So let me say this. Firstly, I will just touch upon LIC IPO that you spoke about. As a brokerage house, we will definitely come out with a subscribe note as and when the approvals come through for LIC IPO. And being the largest player, I think it will definitely command a lot of interest in terms of subscription for the IPO. The question that you asked, whether there will be a shift from private players like HDFC Life, ICICI Pru Life and SBI Life towards LIC, well, I don't think that's going to be a deterrent, because there is enough and abundant liquidity in the market. And I'm sure that during this time, since the time they got into this business of insurance, life insurance, all the three private players have also garnered quite a bit of market share. So if you ask me, well, during the IPO, we had come out with a note to subscribe for all the three life insurance companies. And in order of preference, if you have to ask me, I will list HDFC Life first. Second would be ICICI Prudential Life. Third would be, of course, SBI Life. And more importantly, I think the entire approach towards insurance, life insurance, has changed with this new pandemic or the new normal that we are into. And if you actually go to see the data in terms of the huge population that we have and the number of people that have life insurance, I think it will come in lower single digit. So you have a huge untapped market to tap. And along with that, the approach has changed in the sense earlier these products were purely looked upon as tax saving products, Alex. Now it has become a must and a necessity. Just in case, God forbid, if something happens to you, there is something that your family members can fall back up in terms of financial support. So we are extremely positive, and I'll go one step further. Before we come out with that IPO note, I'm sure we will have a subscribe note, but do subscribe for LIC IPO as and when it hits the market.
Right, that's the word coming in from Gaurang on the life insurance space, saying that now the approach has actually changed towards life insurance due to COVID-19. Earlier, like Gaurang also mentioned, was viewed as a tax saving mechanism. Also talking about the LIC IPO, Gaurang is saying do subscribe as and when the IPO opens for subscription. All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But when we come back, we'll get you the experts' query. Our experts are high risk and low risk ideas, as well as will resolve your viewer queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and on to the rather before the queries, on to the experts and getting their high risk and low risk ideas. Kunal, I'll start first with you. What are the ideas that you have for the viewers today?
My calls, first one which I'm suggesting is about Vatek Wabag, stock giving a breakout, targets to be kept at approximately 320 levels. And the second is a buy on SH Kelkar. I think that stock is also heading towards a breakout. So would suggest a buy for a target of 166 and stop loss at 144.
All right, Gaurang, what are your ideas for us today?
So Alex, we have a showstopper in form of Godrej Consumer products from the FMCG space, thanks to the numbers that they delivered. I've picked one investment idea from the FMCG space, and that is Dabur India. It's been a stellar performer, got multiple products to offer in the Ayurvedic segment and new launches coming through. On the earnings visibility, we have kept a target of 620 on Dabur. And the second one is from the buzzing space, PSU, public sector companies. And this one is a bank, the largest bank, State Bank of India. On the earnings that we've seen and the recovery that lies ahead, we have kept a target of 435. Now, both these are fundamental long-term ideas, so you need to have at least year and a half plus kind of a time horizon.
Okay, interesting ideas coming in, Gaurang. In fact, we've got questions on quite a few of these companies as well. In fact, perhaps I think one or two of the companies that you have mentioned, Kunal and Gaurang, are also being asked about by our viewers on social media. Let's start with the first question that's coming in on YouTube. Samir Ganguly is asking about HDFC, which was bought at levels of 2420. The stock is currently trading around his buy price, Kunal. He's asking what levels he should bear in mind right now. The stock is trading a little weak today, but what's the chart indicating for the near term?
I think it's a stock which has somehow gone into a time correction, price correction in last 3 months. I think from a high of 2,850, it's just drifted lower gradually. So the reason why I'm calling it as drift rather than more of a steep correction, because it's almost taken 3.5 to 4 months for the stock to correct from those 2,800 to 2,400, 420 levels where it's trading. So it's coming closer to a lower end of the support. 2350 was the previous month low as well for HDFC, where the stock bounced off from those levels. So it's very close to a support level. I think if you're in from a longer term or even a medium term kind of a time horizon, I think you can stay invested over here and wait for maybe another 50 to 70 rupee on the downside. If the stock happens to come back to that 2,350 level, I think that could be a good level where you can look to re-enter or maybe look to average again.
All right, the next viewer query is from Danny Verghese. He wants to know whether it's a good time to enter India Mart for the longer term. Gaurang, what's your view coming in on India Mart?
So, again, positive, Cheryl, but in terms of volumes, you don't see great volumes. And moves on the downside, upside are also quite erratic. But if you are looking to invest from a 1.5 year plus kind of time horizon, get into it. Staggered approach, that means buy on dips or add on dips would be an appropriate way to accumulate the stock.
Okay, I want to actually ask a technical question, and this is for you, Kunal. Sagar is asking about Deepak Fertilizers, bought at levels of 2,500, bought 2,500 shares at 110 levels. Should you hold for more upside at this point?
Well, I think if he's bought at 110 levels and still holding on, I think it's congratulations to the viewer for holding on to this stock. So we were discussing the stock yesterday as well, and I mentioned that the last 4-5 months for Deepak Fertilizer have been very, very fruitful. From a rise or from a point of 150, it's jumped up to almost 300 levels at current basis. So it looks very strong in terms of momentum. But I think a much more better strategy for over here is to try and maybe book out 25 to 30% of your profits over here, because after such a steep run, it's natural that these stocks, they either go through some sort of a time or price correction. So you can book out some partial profits over here on Deepak Fertilizer and then wait for the stock to ebb off a bit, let the stock come back to say 240, 250 levels. That's where you can look to buy back again. So you can hold on to your major chunk of the quantity, but I think partial profit booking over here is what I would advise on Deepak Fertilizer.
All right, our next viewer query is coming in from Anjali Sharma. She wants to know, wants to have a short-term view on Dish TV. Does it make sense to buy this particular counter at current valuation? What's your take on Dish TV, Gaurang? Makes sense to invest in this particular stock, even if it's for a short term?
Well, my humble request to all your viewers, Cheryl, would be that don't look at the price of the stock and get into it, because that might turn into a harakiri, because it's been a wealth destroyer and there is huge competition that lies ahead for such companies. My advice would be to look at IDFC First Bank from a medium to long term point of view.
Okay, fair enough. In fact, let's get in another question then. This one on Tata Coffee. I'm coming to you on this one, Kunal. What are the target prices that you would look at from the perspective of what you see on the charts?
I think from a near-term view, the stock seems to have formed its near-term top or near-term resistance. I think it's moved up significantly higher, almost 50% jump in just a matter of 2 or 3 weeks for the stock, from 120 levels to 180, 185, which it tested yesterday. So the rise has been quite steep in a very short span of time. I think it's prudent enough to take profits over here and let the stock come back to a moderate kind of a zone. I think if it comes back to 140, 145, that could be a midpoint of this 60 point, 70 point rally for Tata Coffee. Then I think that could probably be a good entry point yet again for the stock price. So I would suggest the profit booking over here and then wait for another 20-25 rupees correction from current levels. I think that could be a good entry point and a good strategy for the stock.
All right, our next query is coming in from Rajan Vittal. He wants to know whether it's good time to enter Dabur or some correction is likely, or is the stock likely to see some correction in the next 6 to 12 months. Gaurang had a view on Dabur. It was one of his picks in the high risk, low risk ideas. So Kunal, what is your view coming in on Dabur? How are the charts looking for this particular counter?
No, in fact, I think last week we had done this discussion on FMCG stocks, specifically comparing Dabur and Marico, and I mentioned that how Dabur and Marico both have been very close to performing each other. Somehow Dabur in the last 3 weeks has lost its way a bit. It's underperformed Marico, and Marico has shot up significantly higher. It's gone to a different tangent altogether, trying to break past above its major swing highs. So I think relatively and specifically from a shorter term view, I think Marico could be a better bet. Dabur is still trying to grapple through its downward drift, may probably correct by another 5, 7, 10% from current levels. So if you're in from a longer term haul, then buy on dips approach on Dabur could be a good strategy. But if you're in from a shorter term view, then I believe buying Marico could be a better bet instead of Dabur.
Okay, coming to you on this next one, Gaurang, Satya has got a question on Hindustan Aeronautics, and he's specifically asking whether it's going to see a boom on account of the size of its order book. That's always a question with these defense companies, though, the execution of the order book. What do you have to say about that, and is it a good stock to enter?
So, Alex, you must be aware about sonic boom that fighter jets create once they reach a particular speed. And Hindustan Aeronautics, we've been positive as an IPO. We had come out of the subscribe. Then, of course, we had the large order coming in from the Indian Air Force for Tejas fighter jets. This was not only restricted to India, but HAL has also got orders for this Tejas fighter jets from across the world. Recently, they tied up with Rolls-Royce engines, if I'm not mistaken. I stand to be corrected if I have misinformed about that. But a great stock and a fantastic defense FDI play in terms of long-term investment idea.
All right, our next query is coming from Ajit Panda, saying that he wants to know whether he should exit his current holding in Venky's. He bought about 20 shares at 1,510 rupees per share. Kunal, what's your take on Venky's? That particular counter saw a very sharp surge after its earnings. So what should Ajit do with his holding currently?
If there is a chance that the viewer can hold on to the stock, I think it's better, because I think this seems to be more of a calibrated breakout for Venky's. I was just looking at the charts on a slightly medium term to long term basis over the last 2.5 or 3 years, and the stock seems to have come out for the first time after 2.5 to 3 years of consolidation. So this seems to be a very strong breakout for Venky's, and if this breakout sustains, assumingly for the next couple of months, you might see the stock moving up to a very steady and a gradual kind of an uptrend. So I think if you've been holding on to the stock earlier, and if you're in the money, if you're in profits in the stock, then I would suggest you should hold on to it from a medium-term view. Give the stock another 3 to 6 months. I would sense that at least a 20 to 25% upside in the near term could be in the offing for the stock.
Okay, I believe we have a question on Twitter from Manoj. And while Manoj, you've asked about 3 stocks, I'm going to take the liberty of choosing one, since we take only one per person. Gaurang, he's asking about Manappuram. What do you have to say about the gold financiers, and would you prefer this one, or would you prefer Muthoot? Would you prefer the mainstream lending companies?
So, Alex, we've been positive on both Muthoot and Manappuram, but the problem is the short to medium term re-lockdown, restricted lockdown in various cities. That could dampen rather the earnings from this financial year. First, second quarter could be under pressure, but long term we remain extremely positive, and the corrections that have come in both these counters are a great opportunity to nibble into the stock from a long term point of view.
All right, our next query is actually coming in from Saeed. He wants to know whether he can buy Apollo Tyres at current level. What's your take coming in on Apollo Tyres, Kunal? Makes sense to nibble into the stock at current levels?
Well, it looks like I think many of these tire stocks, Cheryl, they've been looking very, very strong. Apollo Tyres, I remember clearly that post a couple of quarters back, when the stock had broken out that 170, 175 hurdle, it went into a completely different level altogether. The range has changed for the stock. You're seeing many of the tire stocks. So even at a time imagine that many of these large cap auto stocks are still struggling. You have many of the tire names which are still looking very strong and formidable on the chart. So Apollo Tire is one of the stock. I would probably suggest that, why not add up even Balkrishna Industries? I think even that stock looks more formidable and more strong from from the tire space. So rather than looking at just one stock, I would suggest have a look at Apollo Tires as well as Balkrishna Industries.
Okay, I want to come back to you on this next one because we've got a couple of our viewers were asking about L&T Infotech. One is already bought at levels of 3750 and another is asking whether to accumulate and what entry price would you suggest? So Kunal, what's your answer on this one?
So I would suggest that wait for maybe some more dip. So for the individual who's asking for a better level to enter, I think around 3,500 could be a good level to enter the stock price. It's gone into a downward drift. It's gone into a correction or a time-wise, price-wise correction. And somehow the volumes have been slightly higher whenever the stock has gone to a downtrend. So that's not an encouraging sign from a near term. It generally indicates that maybe some part of the selling is still pending. And that selling could probably take the stock to, maybe one more round of correction on the downside. So I would suggest that closer to 3,500 is where you should be looking to, start buying if you are looking to buy. And for the individual who's already bought the stock, and I think if he's in from a medium term to long term haul, then I would suggest an averaging opportunity if the stock happens to come back to that 3,500 zone.
All right, and and we have another query coming in from Akshay, who is saying, is it a good time to buy First Source Solutions? Does it make sense to look at this particular counter right now, Gaurang? What's your view of the longer term for First Source?
So I think you should look at stronger mid-cap companies in the IT universe. And as Alex and Kunal were discussing, I think L&T Technologies, L&T Infotech, Coforge, Persistent System, Mindtree, even Tech Mahindra would be preferred choice, just in case if you don't want to get into the large cap IT names. Prefer to be with these names.
All right, on that note, Gaurang as well as Kunal, thank you so much for taking the time, for answering all the questions that you did, and for also the lovely discussion we had on life insurance earlier in the program. Now, one of the stocks that has been absolutely buzzing in trade today, we mentioned this on the program as well, is Godrej Consumer. And this is not just on account of its earnings, where its PAT was in line. It showed decent growth across all segments, and soaps also hit a decent run rate and aided the Q4 performance. The input costs, of course, were a bit of a pressure, but it was a good performance. But the leadership change is what everyone is looking at. We've got the management of Godrej joining us. Nisaba Godrej is joining us to speak about the performance as well as a lot of other aspects. Thank you so much, ma'am, for joining us. What are the demand trends that you're seeing, and have they at all been impacted by the second wave of the pandemic, and how is it different from last year?
I think what we're seeing is that April has actually been quite strong, so a continuation of Q4. My expectations is that we will have a little bit more of that K demand curves that we've seen. So categories with tailwinds like hygiene or household insecticides will probably have strong growth this quarter, and maybe discretionary categories will be impacted to a certain extent. What we've seen in the second wave, obviously it's much worse than the first wave, but we've not had the same supply side shocks that we had in the first wave because everything hasn't been fully shut down, and we've been better prepared.
Nisaba, the company has taken price hikes in certain categories. To what extent are you constrained to take further price hikes, looking at the current demand scenario?
So we've, as you know, in palm oil, we've seen sort of 40 to 50% inflation in prices, commodity prices over last year, and we have been taking calibrated price increases. I think we could see that through next year also. Obviously, you cannot pass those prices directly on to consumers. But the way we tend to manage this is, from a portfolio blend perspective and from a portfolio blend perspective. And we tend to get, market share from smaller players who can't sort of play these commodity prices and they fall out. So we're quite confident of managing the soap portfolio well, like we have in the past year.
The commodity prices have continued to increase. How is the company actually looking at the volumes as well as margin outlook going ahead?
So we obviously, with these sort of price hikes, like I said, you can't pass this all on to consumers. So, we have to work on our fixed costs, work in other parts of our portfolio. I think in, this environment, we've seen that GCPL has quite a significant business also outside of India. So we've used that to manage our margins. So our goal for the year is, to keep margins steady. But if we had to make a choice between margins and volume, we'd probably lean a bit more towards volumes.
All right, point taken on that. And the second wave of COVID-19 has actually hit the rural areas and the smaller towns, which was actually the saving grace during the first wave of COVID-19. Are you worried about this going ahead and impacting the rural growth?
So we can't, we can't obviously say for sure what is going to happen. Like I said, April sort of was a continuation of Q4. Our rural sales have been 2x of urban sales. So I think we'll have to sort of watch closely. GCPL's rural portfolio is only about 30%. So we're a bit, it's an opportunity for the future that we're a bit under-indexed in rural compared to some of our peers. So at this stage, we're not too worried about this, but, we'll have to see what happens going ahead.
Now, Nisaba, a lot of consumers had just gotten back to spending on discretionary items when the second wave hit. Do you see that there is a little bit of hesitancy creeping in, that's affecting growth, say, in the in the hair color segment?
So like I said, April has been a continuation of Q4. But again, we could expect some impact in the discretionary portfolio. But then what we also saw once the wave passed, once people start going out, these products tend to pick up. We're sort of also focusing on what is our full year goal. And obviously you have to also be agile to see what's happening and adjust as you go along, which is what we did last year.
Now, the HI segment has seen strong double-digit growth. How sustainable are these growth levels, though?
So we continue, and obviously this 30% growth was on a degrowth base last year. So to just qualify that for our viewers. But we're quite confident in terms of the inputs that we've done in household insecticides and the consumer sort of consciousness on health, protecting their health. No one wants to get malaria or dengue at this time is very strong. And what we've seen in the year, interestingly, is penetration in household insecticides across all formats has shifted quite a bit. So, I think we feel confident in sort of high single digits, low double digit growths in household insecticides going forward also.
All right, let's talk about your international business. What's the update on that particular front? Are you actually likely to see the recovery continue going ahead because the other nations are past that COVID wave? So do you see the recovery continuing?
So I think our international business overall has done quite well. I'm very happy to report that our Africa business, which was a big focus area of starting to turn around that business, we've, delivered now 3 quarters of double-digit profitable and sustainable growth, and we see that going forward. Indonesia as an economy was quite impacted in this past year, much more than India actually. And even there, we've sort of seen single-digit growths this quarter. They had a good growth base. So their base of Q4 last year was in degrowth. Our LATAM business is also doing well. So we're feeling quite confident in the year ahead for the global business.
Let's talk about the new leadership change at Godrej Consumer Products. You can clearly see with the stock price, the street is cheering it. The stock is up since its IPO. So what can we actually expect from the new leadership, as well as what does this actually mean for Godrej Consumer Products?
So I think our focus is on, which I've spoken about, double-digit growth, sustainable double-digit growth, while building on, our purpose of bringing the goodness of health and beauty across emerging markets. I think Sudhir is a wonderful, wonderful fit, very good both strategically and operationally. I think his track record speaks for that. And I think more importantly than just that, his value system, I think his cultural bit is also a good fit for GCPL. So let's see what happens. Obviously, he will now know that the expectations are very high after he's seen this 15% bump up in the morning. But we're expecting, and it's him, but it's also with the whole sort of GCPL team for him to come and set out, the next 5 years of growth. So I'm very excited.
All right, Ms. Nisaba Godrej, we'll leave it at there. Thank you for joining us, giving us a take on your earnings, as well as talking about the new leadership change that is taking place at Godrej Consumer Products. That's Nisaba Godrej, the chairperson and managing director at Godrej Consumer Products. All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more news on the other side, so don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Now, the Nifty PSE index has posted its longest winning streak in history. Jayesh Khilnani is joining in with the ET Insight to map the rally that has taken it to this level.
There has been an unbelievable rally in the PSE space. The Nifty PSE index has surged for 15 days in a row and posted the longest winning streak in its history. And during this time, it has surged more than 18%, with individual stocks gaining more than 50% as well. If you have a look at the top performers in the last 15 days, you have BHEL that has surged about 67%. SAIL has given you returns of more than 50%, while NMDC, NALCO, Coal India and BEL all have surged about 20 to 40% each. Now on the valuations front, it is interesting because despite the rally that we have seen in some of these stocks, most of them are trading below their 5-year average PE as well, with the highest discount being in Coal India, ONGC, GAIL as well as HPCL and BPCL, along with Container Corp and BEL that are also trading below their 5-year average as well. Now, as per the analyst corner, some of these stocks are expected to do extremely well, while some of these may have exceeded their analyst targets. The ones that are expected to perform well are PFC and REC, 30 to 50% upside potential return for these two stocks. NTPC 28%, IRCTC along with IOC also pegged to give you more than 20% return over the next 12 months. However, the stocks that have run up ahead of themselves or ahead of the analysts' expectations are NMDC, SAIL, NALCO and BHEL, whose target prices are anywhere between 20 to 50% below their current market price.
All right, let's talk about the MSCI reject that's taken place. The MSCI was supposed to come out with a semi-annual review, and they have a list of addition and deletion this time around. And Vivek is here to take us through which are those names. Vivek?
Well, MSCI has announced in its semi-annual index review the list of additions and deletions from the MSCI Global Standard Index. There are a whole host of stocks that we've been highlighting throughout that were likely entrants into the MSCI index. Now the stocks that have finally made the cut, and remember, these stocks and all of these changes would be effective as of the close of May 27th, 2021. The new additions in the standard index are number 1, Adani Total Gas, Adani Enterprises, Adani Transmission. We've been highlighting throughout about how these were the stocks, the Adani group of stocks were said to be very high beneficiaries of this particular inclusion or of this particular index revision. The other stocks that have been included in the index are SBI Cards, Cholamandalam Investment, as well as Bharat Electronics. There is one stock that has been removed from this particular index, and that is Zee Entertainment. Now, as per Edelweiss research, the likely inflows, they expect inflows of a little over $1.2 billion due to this particular revision. And remember, there are also some weight additions as well as deletions within the MSCI Standard Index. Adani Total Gas expected to see inflows of close to $318 million. Adani Enterprises around $310 million, Adani Transmission around $285 million, SBI Cards around $237 million, Cholamandalam Investment around $196 million, as well as Bharat Electronics close to $150 million. Zee, on the other hand, is expected to see an outflow of close to $140 million. Keep an eye out for most of these stocks until May 27th. Typically, historically, there is a suggestion that these stocks tend to outperform or underperform depending on their inclusion or exclusion into the indices.
Thanks so much for that update, Vivek. Now, if you look at the Nifty 50 level, we're just maybe a couple of weeks of decent runs away from all-time highs. And Samit Vartak says that he's not very surprised by that. Samit Vartak, the CIO and partner at Sage One Investment Advisors, we spoke to him earlier today. And what he said is that in the current context, during the second wave of the pandemic, you should be looking at companies that remain steadfast, that are undeterred by the impact of the pandemic. Listen in to a slice of that conversation.
You've got to differentiate between, earnings predictably, which is based on long-term structural stories, versus something which is based on just expectation and hope, which may not play out, because we have seen how things change so quickly. I mean, in February, when I had written the memo, I had no idea that, there would be second wave, and that too that ferocious. And even then I had written that if COVID comes back again, with a second wave, I won't be surprised that the markets would be at all-time highs, even with the COVID wave. And that's what is happening. I mean, if you look at the equal weighted indices, whether it's Nifty or small cap, those are at all-time highs. The broader index is at all-time high. The main indices may not be at all-time high. So it is extremely difficult, to predict. The situation is emerging, and you got to be cautious of that. Just, I think, stick to companies where a lot of these changes will not have material impact on how the earnings will evolve. You can't just put your bet out on economy reviving or, things playing out really in the best case scenario. You got to prepare your portfolio so that you have some hedge if the worst case scenario plays out, not just in India, but across the globe. Just imagine that this thing is going to play out for the next 2 or 3 years. It's not going to just go away in the next 2 months, so think about that and then prepare your portfolio based on that. And I would say the biggest defense in a company where you can protect your capital is earnings growth. And earnings growth should come through in various different scenarios, not just in one of the scenarios. So that's what you need to be careful about.
All right, it's time for the BNSN quiz champion, and the quiz question that we asked you today was how many priority customers does TCS have in Japan? And the options are on your screen, but the right answer is the option 4, that is 35 priority customers in Japan. That's what TCS has. And let's see who is the BNSN quiz champion today. And we have one winner, and that is Prateek. Congratulations, Prateek. You got that answer right. All right, let's shift focus to the earnings that are expected today. And Asian Paints is all set to announce its Q4 earnings today. But what's the street expecting from Asian Paints? Mubina is here to take us through the ET Now estimates. Mubina?
Well, after a blockbuster Q3, we are expecting that momentum to continue in Q4 as well. Remember, in Q3, Asian Paints reported domestic decorative volume growth of more than 30%. And guess what? Most analysts are expecting that super trend to continue this time around as well. Of course, we have the low base too of March 2020 when, the COVID crisis and the lockdown that was just setting in. That will obviously aid the company's volume growth on a year-on-year basis this time around. So yeah, on account of that, we are expecting the revenue to go up by a good 29.4% at 6,000 crores. Remember, there will be a bit of a pricing cut because of, the discounts, etc. by the company. EBITDA is seen at 1,305 crores, higher by 52%, and margins at 21.8% versus 18.5%. Now, here is where I'd like to talk about the impact of the higher costs, the inflationary pressure seen in crude and titanium dioxide. It may compress margins, gross margins that is, but the company has been very strong on cost control, so that will eventually aid EBITDA margins, and the profit after tax, of course, is going to of course close to double at 905 crore rupees. But it's going to be the future outlook that the street will sort of focus in on a little more compared to what the company has already done in Q4, because do remember Q1, April and May is going to see the impact of yet another lockdown of sorts. So that is something that I think will be watched out for with a close eye.
Thanks, Mubina, for that preview. Now, UPL is a stock that has had a stellar run in not just the year-to-date period, but also over the last 12 months or so. It's going to be reporting its numbers later today. Pankaj is joining in to tell you what to expect. Pankaj?
United Phosphorus Limited will be an interesting company as far as numbers are concerned. So 12,300 crores is the sales number that is expected. PAT expected at 1,040 odd crores and EBITDA close to about 2,450 crores. Margins of about 20 odd % is what the street is anticipating. Now the management will be giving a guidance once the numbers are out and they do come in the phone call. So a few things to watch out for. What are their debt reduction plans for next year? Arista acquisition they have done. So what are the synergy benefits, if any, and progress on any R&D backed product which the company is looking at. Now, I would like to say that several global companies have come ahead and declared a bullish commentary for the next year due to agri-inflation. So that is a theme, or that commentary from UPL is something which the street would eye out for. Q4 is seasonally the strongest quarter as far as UPL is concerned. Now, UPL is a company which operates worldwide. Their India business saw great growth in Q3, but it will come down a little bit on a YOY basis as far as this quarter is concerned. Brazil is important. There are some laggard sales or some staggered sales which could not happen in Q3, so they may be transferred to Q4. Some of the other areas like US, Latin America, rest of the world is expected to grow in single digit. India, of course, is expected to grow by about 12%. Overall, gross margins are expected to increase, debt is expected to come out, and guidance is expected to be on the stronger side in line with some of the other global players.
Pankaj, thank you for taking us through what we are expecting from UPL. But even Lupin will be announcing its Q4 earnings today. So what are the estimates saying about Lupin?
Lupin will be the first major pharma company to come out and declare its numbers in this results season, and a lot of interesting things to watch out for. So firstly, the PAT number is expected to be flat at 320 crores in terms of sales. 3,950 crores is what the street is anticipating. Again, a very, very marginal increase on a YOY basis. In terms of EBITDA, 700 crores is what the street will be looking at. Margins overall expected at about 18.2%. US sales 193 million. That will be a very, very important number. Remember, as far as US is concerned, Abutrol is something which the company was betting on. We have the market share data as US releases it. So it's about 6%. It's on the lower side. So what is the management doing to ramp up that particular thing is something to focus on. Steady increase in the US sales. What is the guidance that they are looking for? The exit rate of US sale, 800 million, 1 billion. What would they be looking at is something which the street would focus on. outcome of particular litigations, particular drugs that they are developing, when they expect key launches which are expected next year, all of this will be in focus. Their India branded business is expected to do decent. A double-digit growth is what the street is anticipating. Remember, they don't have direct COVID drugs, something which some of their other peers have. That's why the growth will be in line with what industry has done, with marginal double-digit growth as far as the overall Indian market is concerned.
Thanks, Pankaj, for that update on Lupin. Now, the second wave of the pandemic is what everyone is talking about. And in fact, we spoke with Nilesh Gupta, the managing director at Vijay Sales, and he believes that consumers are likely to be much more tight-fisted in the coming months, and that's going to have a huge bearing on consumer durables. Here's a slice of our conversation with him earlier today, where he's talking about the impact of the second wave of the pandemic on demand.
So definitely the impact is there because there has been the so-called mini lockdowns, but at the end of the day, most of the state governments have shut down the businesses, the retail at least. And so I think this is just something which we were never expecting, because till February, March, everything was going very good. In fact, we had one of the best months in one of the best March months in these last so many years. But all of a sudden, I think April was a big blow. And once again, we are at the same place where we were last year, very, very badly hit, especially during the peak summer season.
Sure. Could you tell me how's the decline that you're facing right now as compared to when the first wave of the pandemic broke, same time last year, and compare it with the pre-COVID levels?
See, basically, I'll tell you the only difference between last year's and this year's, the first wave last year and the second wave now, is last year the shutdown was totally complete at one go. This year what happened is Maharashtra was the first to begin with the shutdown, first week of April, and then in the third week of April, Delhi and the other states of Gujarat and all came down. So we had a little better April compared to last year, the entire April was a washout. This year, you had at least 30% of the normal sales, which would have happened. So I think in that way, that's okay. But now, looking forward, I think we are in a bad situation, because unlike last year, the May seems to have been totally, like last year, the May seems to have been totally gone. And the future also doesn't seem to be so good, because everybody is now talking of the third wave also. So I think the consumer spending is going to be very tight in the coming months, even once we open up.
All right, on that note, we are out of time on this edition of Buy Now, Sell Now. It's a goodbye from Alex and myself. Stay tuned. Markets at noon coming up next.